Hello and welcome to On the Markets. I'm Youssef Anani, and this is your best guide to what's going on in Britain and Europe's commodity, equity and currency markets. In today's show, we'll take you round the markets and review why things are getting just a little bit anxious. We'll look at how hedge funds are viewing gold at the moment, and we'll be wandering through the history of the City of London as a trading centre. And finally, we'll give you a flavour of what next week holds. So let's start with our markets correspondent, Richard Dove, reviewing an anxious week around Europe.
That word Brexit has hovered over the City of London markets this week. Deal-making and arm-twisting in the UK Parliament has just about kept Prime Minister Theresa May on track. But just when fevered brows were being wiped, aerospace giant Airbus threatened to pull out of its UK investments if Britain walks away from the European Union without a deal. Airbus, based in Marseille, said it would reconsider its investments in the UK and its long-term footprint in the country. Brexit worries aside, the escalating trade war between the US and China and the fallout for others has contributed to the biggest weekly loss in the Pan-European Stock 600 and its Eurozone counterpart in 3 months. French stocks had a little bounce due to stronger than expected business activity figures in June. And auto stocks across Europe were again the worst performing, with the sector index suffering its worst week since January 2016. Shares in French utility giant EDF fell after holding company APE said there were no plans to split up the conglomerate. Trade and politics are proving a heady brew in Germany as Frankfurt's DAX index headed downwards. Chancellor Angela Merkel, already leading a political coalition that redefines the word fragile, has clashed with leaders of coalition ally CSU over her immigration policies. This all added to the cautious, not to say anxious mood across Europe's stock markets. Frankfurt's fall being compounded by weak economic data earlier in the week. Milan, though, bucked the downward trend with the news that the country's 2 populist parties will be able to form a government after all. So 3 cheers and Aperol spritzers to that.
So Richard joins me now. So the stakes are getting raised in this trade war. How's China dealing with it?
China has promised a stark response. That's what they say, a stark response to this trade war. The tariffs will affect about £34 billion worth of Chinese goods going into the USA. So the Chinese, without losing face, are quietly furious that this could escalate and escalate, and there'll be response, counter-response, response, counter-response, and it will be a full-scale trade war within weeks.
And what are the implications for that over here in Britain and Europe?
Well, there's a US trader report who says the implications are the worst for the Chinese because, you know, they sell more to America than America sells to China. So who are the ultimate losers in this? Well, we all are, effectively, but the Chinese are more dependent on the US market than the US market is dependent on the Chinese market.
So when Trump says trade wars are easy, he's right.
I don't think he's right, because I think the pain will be prevalent throughout the different economies. I think if you're Boeing trying to do a deal with China on aircraft, it's not going to help you, is it? And the Chinese will use every opportunity to make sure that they're aware, the US are aware, that trade tariffs are a bad thing.
So they're a bad thing, but is there anyone that they benefit?
Well, I suppose those that want to buy a Harley Davidson or something like that in China, if they've already got one, they're benefiting, aren't they?
The value's going up.
The value's going up because the cost will go up very soon. So a Harley Davidson motorbike, if you're riding through the streets of Shanghai and you've just bought it, well done.
You're laughing. Hang on to your Harley.
Hang on to your Harley.
Thank you, Richard. Here in the City of London, there's over 400 years of trading history. It's a place where fortunes were won and often lost. I took a walk through the square mile to uncover its flamboyant and pioneering past. I'm walking in London, the capital of Great Britain. And yet there's a dragon over there, and that tells me I'm about to pass into the City of London, the financial capital of the whole world. It occupies less than 3 square kilometres, but nearly 500,000 people work here, generating the wealth that powers the British economy. The City of London was founded nearly 2,000 years ago by the Romans, and then, just as now, it was full of ethnic diversity, from people gathered from across the Roman Empire, from Europe, North Africa, the Middle East, and here in what was called Britannia. If the City of London is the centre of London, then the Bank of England here is its beating heart. Founded in 1698, it was the world's second central bank after one in Sweden, but this one was the most successful. Originally owned by its stockholders, it was nationalised in 1948, and in 1998 it was made completely free of political influence. So it can set its interest rates without worrying about what politicians think. Welcome to the Royal Exchange. Founded in the 16th century by a merchant called Thomas Gresham, who has a street named after him just over there. This is where people came to buy and sell, and was effectively the world's very first stock exchange. Our Change Alley. This is where the world's very first cheque was signed, and it was made out for £400, which in today's money is $70,000. And the cheque clearinghouse was over there in Lombard Street, clearing cheques for 150 years. Do you fancy a coffee? Well, the merchants of the 17th century did, and they just discovered this new and very exotic drink. But they weren't just partial to drinking it, they were trading it as well. It was one of the most important commodities. Behind me are the gleaming architectural icons of the City of London. Every day, a third of the currency trading gets done over there. But with Brexit looming, will the City of London keep its prominence, or will it dwindle? We'll soon find out. So who can answer that question about the City of London after Brexit? Well, I think this man can. I've got Justin Urquhart-Stewart from Seven Investment Management. Hello.
Good to see you.
So good to see you too. So what is the future of the City of London after Brexit? Is it a horror story, drama, apocalypse, or business as usual?
The answer is it's nothing immediate. You're really not going to notice too much. But yes, there is going to be a very significant difference over time. So there's not going to be some horrible diabolical moment where people suddenly up sticks and off they go to the continent or something like that. No. It'll be much more subtle than that. And you can already hear and feel some of the changes. Banks are forever bringing in new departments, new units. And what the London will suddenly realise after a year or so is that the latest new units haven't started in London. They've gone to Dublin, they've gone to Frankfurt or Amsterdam. And so over a few years, you'll suddenly realise that actually it wasn't quite as vibrant and as strong as it was before. So in 2 years' time, you won't notice anything. In 5 or 10 years' time, you will start to see a very significant difference, I think.
Because I can imagine people in favour of Brexit after 6 months or a year after we come out next year saying, everything's fine, you know, we're right and the prospects are rosy, but you don't think you think those celebrations will be premature?
The London has been successful because it takes a longer term view, and those of us that actually do look at that to actually see where the investments are going, they're the ones that'll see what's happening. But on the surface, you won't see much difference. No, follow the investment, as ever, follow the money. And the money will actually be finding itself, not ignoring London, but new investment, parts of it going elsewhere. And when you start seeing head offices elsewhere, because if the head office is in another country, it doesn't mean they're not going to invest elsewhere, but it's more likely that actually around the head office, other units will be there as well. And we're already beginning to hear of this starting to occur. And the frustration, certainly from some of the European companies, saying, well, look, actually, we need our European headquarters in Europe, and if London's not going to be in Europe, then we'll have to move it.
Being pragmatic about it, yeah.
Yeah.
So I read a report that about 600 people from the city have left or are leaving. And the report was quite optimistic and said, well, the forecast was 1,000. This is only 600, 650. So that's good. But I'm wondering who those people are. Are they rank and file or are they key decision makers? Do you have a sense of that?
You're seeing one or two of head office functions moving over, and those are decision makers. Others tend to be functionaries of particular units which are being developed back on the continent again. For instance, those trading with the euro, for example, where it's more likely to see more euro trading inside the euro area itself. But on the other hand, you will still see new jobs being developed in London. London doesn't stop. London will continue to grow. It just won't have that same force that it had before. So it's a very rather subtle change you'll get to see. And London's going to have to work very, very hard to try and win some of that business back. So it depends just what this Brexit's really going to look like.
So if London is losing out, who's taking over?
Well, it's fascinating when you see the different areas. Some have been marketing directly in London. So, for instance, we've had France and we've had Frankfurt and Berlin, both actually setting up their stall. We've even had Dublin coming along, and Dublin's got a new nickname now of Canary Dwarf, which slightly annoys them. But the idea being that they can actually do the same business as Canary Wharf, but on a smaller scale. A lot of companies in London now have Dublin-based funds because they need to have those funds within the euro area itself. So it's going to be interesting to see how this develops. And so even those companies which hadn't thought they would have to do anything are beginning to realise they need some sort of function within the eurozone.
Is Dublin actively courting business at London's expense, or is it simply finding it coming its way?
Well, initially they didn't think they needed to, but actually they found that people were interested, so they actually had to start having a marketing campaign and saying, well, if you were thinking of coming here, well, then please do. The trouble is they haven't actually got that much space available. So all the people that are interested in it, well, actually they find themselves in a bit of a queue to go. So good for Dublin to actually try and pitch them. What London must do now is work out, what do they do? Is this actually going to carry out like this? Or what can they do to try and either reverse some of this? Is Brexit actually going to go ahead in that actual format? Or to try and make themselves more attractive, to say, come here, because we still have all the other functions which you need for an international operation. So it's not just the trading, it's the legal, it's the social, it's all the other elements which make it so important.
That's not changing. We're
That's
keeping
not
all
gonna
that.
Yeah.
So not total doom and gloom, but a troubling picture.
It's a concern, and a longer-term concern. And those of us that look at London in the longer term will remain very worried until we can actually see a clear change in direction. And actually someone saying, no, London actually can retain it for the right reason.
Are we being very unpatriotic? Because there's some people say, well, we're British. Yeah, the British always win. You know, I mean, where is that spirit?
Britain's been lucky. It's in the right time zone, and it's been in a position where there's been trade from the Far East coming through to the West. And so that linkage has been really very possible indeed. But it doesn't really matter, frankly, whether you're in London, Frankfurt or Paris, it's still roughly the same time zone. The big advantage the British had was a language. And however, one or two people on the continent have learned to speak it.
True indeed. Thank you for your insight, Justin. We can expect more turmoil in the markets as the trade war between the US and most other places escalates. Next week, Washington announces a plan to restrict Chinese investments into the US and limit exports of American tech products to China. As we see from Daimler's woes, what affects China and the US causes fallout over here. We'll also be looking at French inflation figures and the Italian austerity measures and what effect they're likely to have on the Eurozone as a whole. And we'll be continuing our history walk through the City of London. So from me, Yousef Hanani, that's all from On the Markets.